Good morning, everyone, and welcome to this webinar. This is the third webinar in a series on financial health and well-being that us from the Asia Pacific Financial Wellness Initiative have been hosting. Today is International Coffee Day and International Music Day, which are two of my favorite passions. And my third one, of course, is health and well-being. So I'm so excited to open this webinar for you. I'd like to first acknowledge that I'm coming to you from Melbourne, sunny Australia, the land of the Wurundjeri people of the Kulin Nation, and I pay my respects to their elders, past, present, and emerging. And for the next part of this series, let me pass you over to my wonderful partner, Mariko Braswell.
Thanks so much, Vinita. And thanks so much, everyone, for joining us. We are thrilled today to have with us two thought leaders at the forefront of the global discussion on financial health. Elisabeth Rhyne, independent consultant to the UNSGSA, and also founder and managing director at the Center for Financial Inclusion by Axion. And also Krishna Thacker, director of the Asia region at MetLife Foundation. We'll be listening in on their conversation today, which will touch on their respective organizations' recent reports focused on financial health. Thanks so much to you both for joining us today. And Beth, let's start with you. Can you share with us about your work with the UNSGSA and your recent reports on financial health?
Sure. Thank you, Vinita and Mariko. It's really great to be here. I think probably the first thing to explain is what is UNSGSA. SGSA is the office of Her Majesty Queen Maxima of the Netherlands, who has been appointed for many years, has served as the UN Secretary General's Special Advocate, Inclusive Finance for Development. So I think most of you are familiar with Her Majesty's work. She has a small staff, and I've been consulting with the staff, and she has convened a group of about 15 experts on financial health to really take stock of the state of play of financial health in terms of application of the concepts beyond the sort of countries where it was initially developed, such as the US and Australia, and an application especially in low and middle income countries. And so the group has worked. We did consultations with policymakers, consultations with private sector companies, and we've recently released 3 reports. One is directed at policymakers and also sort of gives the overview of what we mean by financial health and why it matters. There's another report on the intricacies of how to measure financial health. And then the third one is on the private sector role in promoting financial health. I'll ask you, Krishna, to talk about your recent involvement with the UNCDF work, a sister organization to UNSGSA, also noting that financial health is very important.
Absolutely. Thank you again, Vinita and Mariko. Excited to have this conversation with you, Beth. So I'll just lay some context and background, right? When we began as a foundation, we initially began with a financial inclusion focus, and while we were implementing it, we would often come across as conversations which would somewhat sound like this, right? Like, 80% people have a bank account, these many people have credit cards, so like these are financially included, and we should focus on the rest. And we kept saying that no, that's not what we mean. Then of course the question was what you meant, right? What did we mean, right? So it was fun. We felt that it's like for us it was more important whether people are living a sort of better financial life and people are financially healthy or not. And then it comes to, okay, so what does financial health mean? So we early, I think late 2013-14, we began supporting a lot of work around just understanding, measuring financial health. US did some pioneering work with CFPB then, now Financial Health Network, and of course their Consumer Finance Research Bureau also had some terrific sort of work done in that space, but not a lot was happening outside, and certainly not in, I think, a good part of majority of Asia. So we began some exercises, and with the sort of UN work, I think that there was an increasing, people instinctively always understood that there was a need to go beyond access and usage in financial health, and something like, and financial health is instinctively easy to understand. It puts customer right at the center of it. But we still need, if you were to collectively sort of make an impact and go beyond, you have to define what it means. Find out how to measure it, and Beth, as you said, so it's like, what can the public sector, or should the public sector and private sector do about it, right? So we began with that objective to kind of create some sort of a common taxonomy. The idea was never to, of course, it's not like we don't see ourselves as an authority, but to begin that conversation, right? Let's create a shared sort of taxonomy, a framework where we can, how do we move from this output focused, most of our initiatives were very output focused, technology focused, product centric. So how do we move from that technology, product and output centric view to a more outcome centric view? Of course, it's more complicated, and we'll cover some of that. So that was the idea. The paper, so we launched a white paper, which basically begins with some the basics of, why is this the right time to move beyond financial inclusion, difference between inclusion and health, goes deeper into the second. So so it's divided into 5 sections, right? The first section is around sort of the very basics of why financial health, why should we look at that approach, over financial inclusion. And, the idea is not to say financial inclusion isn't helpful or bad. Of course, we all acknowledge and recognize that. I think there's been some absolutely amazing progress made. But the question is, what's next, right? Like, how do we, is inclusion enough? Clearly not. So what do we do next? So that's chapter 1. Chapter 2 goes deeper into sort of the underpinnings, what drives, what are the determinants of financial health, and what are the outcomes. And there are a couple of frameworks that might be useful, but that's not for everyone. The sections are developed in a way that you could more or less independently read them, and begin from wherever you want. So the first section is, second is on that. The third one is around measuring financial health, which I think where Beth has done some amazing work too. The fourth is public, what's in it, and what can public, fourth is what can private sector do about it, where I spent a lot of my time thinking about. And the fifth one is the public sector sort of view on that. Yeah, so that's in summary the report. Perhaps, I think, Beth, we can just jump in right in the conversation, and then for others, here's how we'll structure it, today's conversation. This was just some background on the paper, but I think, oh, just a second. Again, I forgot. Please close the door.
I'll go ahead, Krishna.
No. Yeah, no, so here's how we'll structure it broadly. We will, it will be a conversation. We'll begin with touching on the conceptual and customer level, right? Like, what is, we'll not go technical around definition, but what is, like, what does it mean for a customer? We'll cover public sector, their role, measurement, incentives, examples, and challenges. And then on the private sector side. So we have a few sort of areas to cover, and I can jump right in, maybe, with a question to Beth. And again, as I said, you can all find definitions on internet and whatnot, but I think one of the tests for me, whether I understand something well or not, or even when I understand something well, it's still a challenge, like to talk to my family, let's say my grandmother, right, who's never been to school. She has very little patience for for fancy and cool concepts. So she would ask me, what do you do? And then I will tell her, oh, we got on financial health, like, what does it mean? So Beth, let me just put that question to you. Help me, how would you, explain that to somebody like my grandmother, right, who's never been to school?
Well, I think I would ask your grandmother. And in fact, I've asked people in a lot of different context what they think financial health is. And, I participated in some research, especially in India and in Kenya, in which we did exactly that. We went around and we asked people, what do you think about, what does financial health mean to you? And people said the same things over and over again. It's when I don't have to worry about where my next meal is coming from, when I don't have to ask my brother for money, when my family has a secure place to live in. And what you get from that is, from the way people talk about it, is how important it is to them. So what I came away from that research thinking was, people all over the world are striving to be financially healthy all the time. It's a really central aspect of people's lives. And what we're trying to do in looking at financial health is to capture that, the fact that people do have this ongoing drive to keep their financial lives secure and functioning, and that their financial life makes other parts of their life work too. So it's sort of it's intuitive that you kind of know what it means, but in the financial health working group, we decided that we really needed to come to a specific definition, and that was because we were hearing confusion from people. First of all, there was confusion about, is it financial health? Is it financial well-being? Is it financial wellness? And people were actually saying, oh, no, we're on the financial health side. No, we're on the financial wellness side, and that's different. But it wasn't different. It's all the same, basically all the same concept. But so we came up with a definition that is essentially about being able to manage one's financial life smoothly in the present and in the face of shocks and for the long term. And I think what I really like is the way Commonwealth Bank of Australia puts it. They have a slogan that says, today or every day, rainy day, and one day. So that captures things are working for you right now. If a bad shock happens to you, you'll be okay, and you're pursuing your goals. You're able to pursue your goals. So does that suit your grandmother?
I love how you sort of the CBS. I wouldn't, although I looked up. I've been familiar with their work. They do some fascinating work, which we'll cover briefly. But yeah, today, rainy day, every day, and one day. It's an amazing, I think, way to put it, right? And for me, I somebody like me, right? Just using my example, like I hate thinking about money, and that's kind of even when I was young, I come from a low-income community, so it was like the only reason I need money is just so that I don't have to think about it. But that's that's at the highest level. That sounds okay, but it's also not okay, right? Like you kind of got to think about it from a long-term, from one day, rainy day perspective. So yeah, I think this is great. Moving, from a financial, we've done a lot of work around financial health as began with microfinance, financial inclusion with microcredit, microfinance, financial inclusion. Now it's financial health. How does it matter, right? How is it making a difference from a low-income individual or family perspective? A lot of people, of course, keep asking that question around, is it just a new name for financial inclusion? How does it actually make a difference for what we do, what happens to a low-income person or a family?
Well, so I don't think financial health is it's sort of a difference in character. You have to think of financial health as the objective. All these other iterations, microfinance, microenterprise development, financial inclusion, were all about getting services to people. And so financial health is saying, what difference does it make that people have these services? And so it really is looking at financial inclusion from the customer's perspective, because pursuit of financial health is what the customer is actually doing. And so you're putting what I like about financial health and why I continue to be interested in spreading it is that I think it keeps attention on the customer's outcomes. And, you know, it's very easy in this current environment to get all excited about digital this and digital that. And, you know, people get so excited about the new things that are coming along that they sometimes forget to ask the question, is this actually making somebody's life better? And so financial health just tells you, you have to keep asking that question.
Yeah.
So,
sorry, go ahead.
well, you asked specifically about low-income people, and that was something that I wanted to pick up on because, you know, one of the issues is that financial health came out of high-income countries. The concepts that we're working with, they came out of high-income countries. And when I first heard about financial health, it was in the context of doing a study to see whether it applied in developing countries. And my first thought was, oh no, it's okay for middle-income countries. But when we're looking at either the poor, the very poor in middle-income countries, or the majority of the population in really low-income countries, it doesn't matter because they're so poor that they can't be financially healthy no matter what they do. And so the concept is not relevant. We still have too much work to do just to get basic services to them. And I think that's not accurate because what I see is that people at every income level can be better or worse at managing their financial health. And so for low-income countries and low-income people, we need to figure out how can you be more financially healthy, even if you're not ideally financially healthy? What are the things that can help you be better in terms of managing your money than you would otherwise be? So,
Yeah, you know, I think that one thing that I love about this term, you know, is always semantics there, but one thing that I love about that financial health term is just what you said, right? It's impossible to not think it from a customer's perspective, right? You could literally have a financial inclusion conversation for 1 hour without putting customer in the center, right? People have done that, you know, they talk about is, you know, bank accounts, and payments and products and technology. And you see, you know, hours of conversation where, you know, the family of the individual is rarely talked about. But it's impossible more or less to have a financial health conversation, and it kind of it inherently puts the customer at the center, right? Because that's who you're talking about. Financial inclusion can very well be about people just having access to how many bank accounts do people have, how many loans do people have, and that's kind of where the difference is, right? Like, I think that's an interesting, that's from developing and developed countries, right? You see a lot of developed countries where which are fully included, you know. In terms of that, the individual is fully financially digitally included. They have phones and credit cards and whatnot, but, you know, their financial health situation is precarious. You know, they struggle even buying food, despite all these sort of access to great technology. I wouldn't say great products, but products, financial products and whatnot. So yeah, completely.
Well, so Krishna, let me ask you a question. You know, one of the things we're talking about financial health as something that people strive to be more financially healthy. But at the same time, there are a lot of factors that prevent people from being financially healthy. So it's not like you can just suddenly say, I'm going to do everything right, and so and I'll be financially healthy. But so how would you look at the difference between the personal responsibility and the responsibility of the broader financial system or broader economic system?
That's a fascinating question, right? And we could just discuss that all hour, but I think it's the simple answer is certainly, I think, yeah, certainly not the individual, right? It is, while an individual can do a bunch of things, but from a responsibility perspective, I think, yeah, it's a tricky answer. I would, have to be careful about it. And in different contexts, it's different, right? Like where there are still people who are, financially healthy because of a bunch of behavior and habits. And there's just so many incentives, disincentives from the external environment, both market and regulatory environment, which could influence your decision and which do influence people's decisions and what sort of work they can do beginning from income, right? So that's another dimension at some point I would love to cover that, like where does income and jobs and work come into all of this, right? But if we park that aside for a moment, I think it's a combination of both, but ultimately it's of course what sort of product, services, and nudges do you have? What is the customer protection sort of? It's kind of more educated you are, the more sophisticated and better financial products you use, and the more financially healthy you are, right? So there is a link between, your education, your health, your financial sort of decisions. So now I know I'm rambling around, and it's a complex, it's a very, very complex answer, as you would know. But certainly, I think putting all the onus on an individual is certainly unfair, right? It has to be, I think, a sort of symphony between, the government and alignment. Of course, the client, the individual wants to be financially healthy. Now, the question is, how are these incentives aligned with the private sector as well as the public sector? If sort of that's a way to round it up, but happy to go deeper into some of these areas. This is, I think, the core of it, right? The economic underpinnings behind that.
Well, one reason for the question is that when you look at a lot of the suggestions about what to do about financial health, they end up being, we have to nudge people into the right behavior, and so certainly a lot of, and this is something that often comes up for, this is what financial institutions should do. They should do behaviorally informed products that help overcome the biases that people have that end up with having them make poor financial decisions. And so there are lots, if you go to the website, for example, of Commonwealth Bank, or you look at another bank that's done a lot of work is ING Bank in the Netherlands. And what you'll see is a whole host of products that are essentially either budget planning or reminders or alerts or guardrails that kind of help somebody avoid doing the wrong thing with their finances. And when I look at those things, I think they're great, and there's lots of innovations going on, and I'm glad that's happening. But I also think it's not enough, because it's really the bigger environment that somebody is in that is going to determine whether they're going to be financially healthy. And I think income, which, you want to set aside income, but let's go back to it now, because I don't think you can fully set aside income. Even though when you do these financial health surveys, one of the most striking findings is that there are financially healthy and financially unhealthy people at all the income levels. So it's not just about income, but income's there is it's a big aspect. So do you want to comment on, what's your comment on the income question?
I have a lot of thoughts on that, but just to kind of address your behavioral point, right? I think you're right. It's, I think, exploiting our, and when I say our biases, we are all, my favorite behavioral economist, Daniel Kahneman, Thinking Fast and Thinking Slow, I think, who in my view is the father of behavioral economics. So if you read him and, somebody asked him, he's like, he discovered pretty much, I think 36 biases. Somebody asked him like, how do you deal with it? Like, are you better, after knowing that? He says, no, I'm as prone to these biases as everybody else. And I think a lot of people miss that somehow. And people who are new to this whole notion of behavioral economics, they somehow think that it's about low-income people's behavior that we're trying to change. And I think that's just a wrong framing of the problem. I think what you're doing is, most of us have very similar, we are all as humans prone to, as much as we like to think we are different, which we are in a lot of ways, but we are same in a lot of ways too. So I think that's about, using the context to sort of, it's a little like my 5-6-year-old kid is learning hacking, right? So he's constantly asking me, what is a white hacker and a white hat hacker and a black hacker and like a real hacker, right? So I think it's about being that ethical hacker, right, of our biases.
Your 5-year-old is learning how to be a computer hacker?
He's 6 now, six and a half. So yeah, he was asked, I didn't know where he learned about all these terms, were white hat hackers, and I had to Google first, but I kind of got the idea, so I have to explain, like, but it's similar, right? So behavioral scientists, coming to the sort of, so I think that's an important bias that a lot of people who are new to the behavioral world sort of go. Initially, there would be a lot of articles where they say, oh, we need to change this behavior. It's not about changing the behavior. So it is about, but it's about changing the context where you could sort of leverage the behavior for better practices and not worse. But coming to income, you're right, and that's been, we, at least internally in the way we work, we've one thing that I was happy about financial kind of expanding from our focus from inclusion to health, it allows us to expand our focus and work to to small businesses, income side of it, jobs and gig economy, and we can cover that subsequently. But I think you're right, it's while it is not, I think sometimes people both overestimate it and underestimate it, right? When people think that it's all about income, it's certainly not all about income, but you cannot ignore income when you talk about financial health, as you said. So we do work in that space, and at the same time, we support programs which are around, skills and jobs and upskilling and reskilling and small businesses and all that. However, the tricky part is, how does that feature into our financial health, measurement and strategy, and when you that's kind of where the output outcome mismatch comes, right? Like, as a financial provider, it's of course too much to expect for them to go in the sort of skilling and income and all that realm. So while I think a lot of, at least I see a lot of donors, including us, we've expanded into the whole workforce, jobs and skills space, which I'm pretty happy about. So that's kind of one actionable thing we've done. But I think how to weave that into a common narrative or sort of a lot of the measurement frameworks, they cover income, but not necessarily directly. So I'm also curious to sort of see where do you see that income playing a role in how we measure, and what is sort of the weight of income versus other attributes. I have some sort of findings about comparison between income and savings and how they affect financial health, but we can sort of again speak to that.
Well, I think one of the biggest findings about income has been that it's not necessarily the level of income, but it's the predictability and the reliability of income. So people who have low incomes that are totally predictable have a much easier task of being financially healthy, because financial health is so much focused on the question of whether you run into trouble that you can't get out of, and whether you can smooth your consumption from one month to the other. And so there's so much emphasis on the vulnerability to poor financial health of people who work in agriculture, of people who are day laborers, and all various people whose incomes are either seasonal or unpredictable. And that's why I'm so interested in your work on the gig workers, because gig workers kind of occupy this middle ground. They're not completely disconnected from employers, but yet they're not full employers, and that their incomes are going up and down depending on how much work they get. They're not so. Maybe you look at gig workers as better off than others, or maybe you look at them as worse than regular employees. But yeah, tell about the work that you did studying gig workers and what you concluded.
Sure, yeah, that's a interesting sort of space, right? And for so many reasons, I think we all know that it's around us everywhere, but a lot of times we kind of don't realize how big and important that space has become in a matter of 8-10 years. It's predicted to be about, just the gig economy is predicted to be about $3 trillion, which is the size of India's economy by 2025, right? Which is 1/6 of the world. So it's just become, I think it's impossible, and nobody should ignore sort of that space. So millions of people, sort of struggling, and then there is no, and it's not, as you said, it's not, just to clarify on the context, it's not a judgment about whether that sort of space is good or bad. There is, of course, there is always never black and white about these things. I think a lot of people who were not able to get employment are able to get employment, but there is, of course, some fundamental differences, right, between informal gig work and formal work. And part of the problem, I think, Beth, is that as we notice, our financial systems, all institutions, everything has been designed on, I think the core of is that predictability, right? Has been designed for people who live predictable lives. And our financial systems are not designed for people who don't live predictable, and their lives are extremely volatile, right? Like just some very large gig economy organizations, I won't name them, but the lifespan of an employee, that's 4 or 5 months, and they keep going and coming back, and there's just no way. And that looks like at the surface it looks like yeah, okay, they would go back to somebody else and come back, and they do that. But imagine the problem, right? For an employer to think about their financial health, government to think about their financial health, although you could see that, hey, with technology, why can't you just give them a long-term savings account and look at all the data? But that's the problem in terms of how our systems are designed, right? Our systems are not designed to do that, and they are being designed as we speak, or redesigned. But so that person is kind of, it exists, but it doesn't exist. He's still kind of that no-file, thin-file customer that they were in the informal economy. And I think it's what gig economy often does to people. Classic example of one of my, I wouldn't say favorite, but one example from India that struck me was I think a lot of people who travel to India would have noticed about 2012, 13, 14, all the cab drivers, right? Their previous income before sort of the gig economy, let's say, was about $200 to $50. Comes from these tech companies, and a lot of their incomes rose up to as much as 6-7 times for a period of time. They're not that much now. So imagine, I was making $250 for my last 15 years, and now I'm making at times $1,200, $1,500. Imagine the quality of life that changing. So a lot of people started buying more, sort of like making investment, like they started buying more cars, or they kind of rearranged their lives about it. And in a matter of 6 months, where the companies had to adjust, their income fell back to less than half of those. So you could see the struggle, right? I think it's worse for me. So imagine from 250 to 1250, and then from going from 1250 to 300 or 400. It's way worse than me going from 250 to 400. And it can disrupt. I would rather like to go from 250 to 400 and stick there, rather than throwing me from 250 to 1500 and then going back to 400. The way it has disrupted a lot of people's lives is just when you ask them, it's pretty sad. And well, this is to give you a context. But coming, we did some lot of we continue to do a lot of work in China and Malaysia specifically around understanding their issues and challenges, and some findings. Let me just make sure. So questions we ask is, why do they choose gig economy? What are the experiences? What is their financial health status, and how do they navigate their finances, right? So some findings, and I think one of there was some interesting difference between Malaysia and China, where 42% Chinese gig economy workers in our sample, it was a smaller sample, we continue to expand that, said that they picked this because traditional jobs are hard to find, versus Malaysians who wanted flexibility. So their main reason was that we want flexible jobs. In China, it was about 40-45% said we only did this because we couldn't find a job. And in terms of their financial health status broadly, they are able to meet their daily financial needs, but I think most of them woefully struggle or are underprepared to deal with, the other days and the rainy days or any sort of unexpected or out of routine needs. So like most Malaysians, only 20% Malaysians said they could come up with, $250 if there was an emergency, right? About 80% couldn't.
What percent? I'm sorry, what was the percent?
Only 20% said they could. So, and then one of the, I think, points we briefly covered, and I wanted to, one of the biggest insights, and they looked at the UNCDF team, did that research, and they looked at the data carefully, factor analysis and all. I think one of the biggest determinants of financial health, as Beth, you started, I think, alluding to that, was the habit of savings, not the quantum of savings. Huh? So I think a lot of, and that difference was like 18% versus 62%. So about 62% people habit of savings. It almost did not matter how much they saved. It could be as small as whatever 10 ringgit, which is like $2-3 a month. Were able to cope up with these emergencies versus 18% who did not have habit of savings. And I think that's an area that I would love to go deeper into at some point. But it kind of sounds obvious when you think like that, hey, what people who have a habit of savings should be able to manage their emergencies better. And then there is a similar interesting study done by Canadian payroll system. They collect data every year, and they looked at all income spectrums again, and saw that, I think that savings, the habit of savings was the biggest predictor of how financially healthy you are. And that income range varied from, in both cases. In Canada's case, it was, from 70,000, which is their median income, to about $180,000. So even at $180,000, people who did not have habit of savings, they struggled as much as people who had way, way lesser incomes. So yeah.
So that, I mean, what you would take away from that is first of all, there's a causality problem there of are they financially healthy because they save, or are financially healthy people the kind of people who save? Which way does it go? But assuming that there is just a hugely strong connection between the habit of savings and financial health, to me that would indicate that one of the things that needs to happen is that there should be a huge emphasis with youth on savings. And I don't, I was just reviewing some studies on savings, and among the findings was that the youth savings programs, where youth were both encouraged to open savings accounts and then given incentives or whatever, that the youth savings programs had a big positive effect. So sometimes I think we're making it too hard, and financial health is really about save more, borrow less, and it's easy to say, but it isn't so easy to do. But I find that policymakers don't like it when I say that. It seems too simple. And it also doesn't give, if we want to, really focus now for a minute on the public sector, the question of how is the financial system structured so that it helps people borrow less and save more. And this is a huge problem because financial institutions make money off of borrowing, and they don't make much money off of savings, especially for low income savings. And so you have this inherent contrast between the fundamental incentives of the financial system to get people to borrow more and the fundamental insight that savings is a key element of maintaining good financial health. I don't know what to do about that.
Yeah, and these are again all amazing points. And it's only not borrow more, the incentives also spending are against, right? Like in an economy,
That's right. It's spend less, spend
right.
less.
So,
and there's incentives.
So it's like two against two or three against one. But I'm the optimist in me thinks that I think technology changes the game. The ability, of course, previously same, right? Like the same reason banks were not able to give loans to low income people simply because that sort of at that ticket size, their business models were just not stand up, right? To serving them. That's one of the sort of reasons. But I just hope that technology is, I see that happening, right? Is able to change and flip these incentives in many cases where the startups are able to, actually nudge them and bring the right sort of partnerships in place to enable that to happen, to enable people to save as little as, whatever, in cents on a regular basis, something that, previously banks were not able to do. But you coming to the public sector, Beth, I know you, and going to your paper, I think you've alluded to some of these areas very well. There is a section on the financial, there is a sort of section on the role of public sector in your report. And I think you covered this well in summarizing broad applicable measures that the policymakers can adopt. And it'll be wonderful if you could just help expand or summarize those.
Well, I think that we don't know really the full implications of a financial health perspective. They go all the way from if you are a financial sector policymaker, you want to monitor the financial health of the population because a financially fragile population is going to also mean a volatile financial system. You can see that financial system stability actually is correlated with or is boosted by a financially healthy population, and actually this is one of the things that makes the International Monetary Fund interested in financial health, which as they're starting to be interested. But it goes all the way through the financial system. That when you're looking at oversight of financial institutions, I think in the sort of the broader sphere of oversight, but when you get into consumer protection, market conduct, you definitely want to have the people who are responsible for market conduct and consumer protection supervision really thinking about the financial health of the customers and seeing whether the products that are being offered are supportive of financial health or not. And of course, we know that there are many predatory credit products that are not. And maybe at a broader level, when I look at the current scene, and India is one of the examples for that, is what causing what aspect of the financial system is causing the greatest stress on financial health. It's digital credit right now is a huge issue it's a huge issue in India, it's a huge issue in Kenya and many other countries. And the problem for a regulator there is that a lot of it is kind of beyond the reach of the regulatory system because they're not fully regulated institutions. So that's a direct connection. And then, finally, I would say that the fact that financial health depends so much on the broader environment suggests that financial sector policymakers ought to be connecting with their colleagues in other ministries. So like the social protection ministries, social protection provides that income floor that keeps things steady if people have a volatile income. So how can financial sector players work with them. Also on labor ministries. Are the labor rules, as we just were talking about with respect to gig workers, do they protect people enough to help them? So I think that's a big challenge, because financial sector policymakers are not used to working with across sectors like that. But when you look at financial health, you see that it's really important to do that.
Yeah, and you make, so that's a great point, just to sort of add an anecdotal example of how we are doing that, right? Now, when we began looking at the Malaysia market from a financial health perspective, again, Malaysia is doing very well. They've done amazing for themselves. So not taking a single thing away from that progress. And there's just a lot of exciting things that Malaysia has done. But, one thing that I immediately noticed when we were looking at the sort of data was they had their household savings rate was 1.4%. Now, if you take the the government, which was one of the lowest in all OECD countries, and if you take the government mandated savings, which is their provident fund or whatever you call it in different markets, it goes negative. We kept asking, like, isn't that a little really low? Of course, India, Japan, China do a lot better. But I think that's that incessant sort of progress around, credit. And so this is where it could land you, right, as a nation. And then, we kept highlighting it that you have to address this, right? And fortunately, Malaysian government is great to work with. We are engaging with them on, as you just more or less in a model you said, right? We're bringing in the labor ministry, the sort of the digital, there's a ministry for digital, the central bank, and all of them are coming together to both work specifically on the gig economy workers and what we can do around their financial health, and also broadly, how do we increase sort of this unsustainable sort of household savings rate. That kind of gets us to sort of measurement, right? And again, in your report, you've evaluated many measurement sort of approaches that are happening. And is there like what would be for a government, let's say, that what would you recommend? Like, how would they start understanding this? Because a lot of times, as you said, it's very fragmented, right? They have a view. A central bank has a view of how many accounts do you have. Some other ministry has a view of how many, whatever people are. It just rarely comes together as a cohesive sort of framework. And therefore, it's difficult to make a policy which kind of connects these dots. So, going to measurement, what would you recommend based on your
Well, I sort of think of financial health measurement as what you want to get to is you want a thermometer for financial health. And, a thermometer is an easy to use tool that will tell you right away whether the person is sick or has something wrong or not. And so you want to get to that point with financial health where you can just really kind of take the temperature of the population. But to do that, you have to invest in a lot of survey research to look in depth and to know what your thermometer needs to look like. In other words, what questions does it need to ask in order to quickly be able to assess a person's financial health. And so that's what's been happening in the countries that have really developed, or in the organizations like the Financial Health Network and the Consumer Financial Protection Bureau in the US, that have really developed quick ways to measure financial health. And so I think we have a lot of examples that are around, and there are a number of different issues and controversies that come up when you try to come up with the questions. But a policymaker who wants to do a financial health survey has a lot of input to work from. And the question right now is whether we can all sort of come together and agree on a common way globally to measure financial health, because that would allow for cross-country benchmarking, which has been a real driver of improvements, like improvements in financial inclusion for sure. And right now we don't have a global way to measure financial health. There's a lot of different ways, but there's at least 30 countries that are starting to measure financial health right now. Many of them are working with the OECD, although not just in OECD countries, because it's part of the International Network of Financial Education that the OECD runs. So that's about 30 countries. And then I know that the UNCDF initiative is going to be working with 3 or 4 more countries this coming year. And so we'll have a whole bunch of countries that have tried to measure financial health. And we can use that data to really not only learn a lot more about how financially healthy people are, but start looking towards how do we pull this together into a global thing. And right now, the current way to do that is just through the Global Findex, which has measured, it hasn't measured all of financial health, but it has measured this question, can you come up with a lump sum in an emergency? And of course, it finds that more than half of the people in low and middle income countries can't. But yeah, there's a lot going on in measurement. It's complicated, but it's also exciting because we're learning so much.
Yeah, I would really love to spend a little more time. One of the sort of concerns is how does it all, as you said, it would be amazing magically if there is like one way to measure it and we can calibrate and whatnot, but that's wishful. And so I wonder, how that sort of evolves and what could we do to sort of make sure, even if it's not the same, but at least there is an ability to compare across markets.
Well, one thing that the UNSGSA is trying to do is just to provide a meeting point for all the various players who are doing this financial health measurement. And we just had a call last week, I think, to just get people together that we knew about and say, what are you doing? Do you think it's important to come to to have a global way of measuring financial health? How could we bring it about? And I don't think we've got answers yet, but we know that that we can work together on it. I think there was a lot of agreement around the room the Zoom room that it was an important thing to do. We are almost out of time, but we haven't talked enough about the private sector. So yeah, I was. I just, what do you see as, you're in a foundation, but a foundation of a private company. How does the private sector look at the business case for financial health work?
Yeah, responding to, generally, broadly, I think I found it to my surprise that, I think it's been, they've received it, and I think there has been a lot of amazing efforts happening on that end. So the private sector has been taking it very well. I mean, once you think about it, it kind of course, as you said, if their customers are financially healthy, I mean, think of a bank, any financial institution, they would want financially healthy customers than unhealthy customers if they were thinking long term. Now, the reality is not a lot of people think long term, and as there is all sorts of players in the market, including the payday lenders and extremely sort of expensive fintechs who are just technology-driven payday lenders, but broadly, I think at large, significant institutions where it matters, and even there is, I think, a strong subsection of fintechs which are focused on inclusion, financial health, and they're doing great, better than you would think. So I think there's just a lot of traction that sort of this idea is receiving in private sector. It almost instantly, connects. I've rarely had to hard sell this idea when we speak, as donors or as when we engage with them. So at the highest level, it's been amazing. But I think the question is, how do they drive that change internally, right? There has been, I think it's still a product technology centric world. How do you sort of drive that viewpoint around? And so what the question that I think I've tried to answer in that paper is, what is the difference between customer centricity and financial health, right? Is financial health just sort of a financial sector term for customer centricity? And sort of here is, there is some interesting, so I think, framework there in terms of how private sectors can go about making that change internally. But just to kind of get to that difference between financial health and customer centricity, I think it's kind of, for me, it's the it's the ultimate level of customer centricity, right? A lot of organizations stay and begin at customer service, where they try to be good at servicing customers, responding to their needs. Then they move up and focus on customer journey and try and sort of proactively, design their processes and products oriented to customer. Then they kind of move to the next step. Some organizations do, where they focus on customer experience, not only their specific parts of their journey. And then I think the ultimate sort of, for me, the customer centricity peak is, financial health, where you focus on customer success, right? Not only experience, journey, and service. So for me, that where they meet is, I think that financial health meets customer centricity sort of at its peak. But there's just a lot of exciting stuff happening there. And again, I can, in the interest of time, yeah.
Yeah, I think there's an intermediate step in between customer experience and financial health, and that is, did they succeed in doing what they were trying to do? But anyway, that's a small point. But yeah, one of the things that in the discussions that we've had with financial service providers is how broad the business case is. So they're telling us about the business case that they've experienced, and it's in all different kinds of areas. It's in loyalty, customer loyalty, or attracting new customers, or the profitability of the customers that they have, or the employee loyalty, or, it's just many different areas that that the business case comes up. And that's a great thing, but it's also the hard thing, because it's harder to then immediately tell an institution, here's what you'll gain from a financial health perspective. But I see that we are out of time.
Thank you so much to both Beth and Krishna. You've come up with such fantastic discussion. I didn't want to stop it, but I'm also conscious that, we have an hour and we're heading towards the end of that. But so many takeaways, guys. I've just picked the top 4 that I really found absolutely fascinating. The conversation moving from financial inclusion to financial health is really representing moving from purely supply side to also recognizing the demand side and the need for the customer. So that is something from, as a banker, my entire life, that's so fascinating to see that shift, and the fact that it's now proving the business case for the providers as well, to be able to see it from the customer's lens. Absolutely fantastic. The second one I really loved was that, the concept of financial health, even though we initially start thinking that, oh yes, this applies to high income and maybe medium income countries, but you bet to find that actually it also applies to the low income context, gives us so much comfort, because from the view of the Asia Pacific Financial Wellness Initiative, we have such a mixed bag of countries that we represent in the region. Some are at that lower end, some are at the higher end, and some are at the medium end. And so it's really great to see that there is a national consistency that we can take and measure this across our region and find ways for us to learn from each other. I loved the fact that, you've talked about the role of the public sector and how the best thing that they can do is see themselves as an ecosystem, part of an ecosystem, so that we break down silos and look for how we can connect the dots between different ministries and jurisdictions to see the customer's view through that, from the lens of the customer, and for the private sector to see that the customer's success is, in the longer term, their success as well, which really is exactly what Mariko and myself are trying to do from the Asia Pacific Financial Wellness Initiative, really find ways to create that space that you were talking about there. In the Asia Pacific region, I agree, as a start, so that we can really connect the dots and join efforts together. So I could not have expressed better. And I must say to our audience, we didn't feed these to you. You came up with these yourself, but they're absolutely fantastic insights. So thank you so much. We could go on for another set of series, and I know we'll have you back very shortly to discuss other aspects. But thank you so much. We'll hand over to Mariko to close up this webinar.
Thank you so much, everyone. Thank you to everyone that is attended. Thank you, Beth and Krishna, for your time. This was an amazing discussion. basically, if you'd like to learn more or would like to collaborate with us at the APAC Financial Wellness Initiative, you can reach out to us on our LinkedIn page. Until then, we'll see you next time. Thank you so much, everyone.
Thanks.
Thanks
Bye.
again. Have a great
Thank you,
day.
Beth.
Bye-bye.
Lovely chatting with you. Bye-bye.